Hello and welcome to TA for Traders. It's Tuesday the 14th of November. In this video we're going to look at the charts on the loonie, which is the US dollar versus the Canadian dollar. In TradingView it's the code USDCAD. What we'll see is that the dollar strength has taken it from the start of September up to the Fibonacci 50% level. Since then, we've seen resistance, it's pulled back. Is this a flag or is there going to be further dollar downside? Let's look at those charts. So starting with the weekly, so each candle here represents 1 week's trade. Now, I haven't got the Fibonacci lines on here, but if you draw Fibonacci from the high of the week of the 1st of May down to the low, which was in the first week of September, the 50% retracement is virtually identical to the highs that we saw on the weeks of 23rd October and the 30th of October. Those highs actually were very close together as well, which started concerns on a double top. Since then we have consolidated, but it could just be a flag. Other factors on this chart, the moving averages, the 20 did cross the 50 in a downward bearish cross direction, be aware of that, but the 200 week moving average is moving up and would give support. That's presently at 125.35. Momentum still negative, hasn't fully recovered from the big down move that the dollar had. Slight uptrend, but it is still below 50, 49.32, and the same on the MACD. Although they are indicative that there is at the moment some upside momentum, they're not above zero. So just a sign that momentum is improving, but it's not yet positive. On the daily picture, you can see that we're finding immediate support on this consolidation around the 20-day moving average. That will remain key. The index is trading right around that 20-day. That's at 127.27. We need to stay around it or above it to maintain the up move on the dollar. Once we move below it for 3 days, I'd become concerned. It will then start to roll over. Below there, the 50-day would give support. That's at 125.12. When the 20 crossed the 50, it wasn't a golden cross as the 50 was moving downwards. Although, as you can see at the time, because the moving averages were close together, that did give an impetus for a move up. Momentum, RSI is in a downtrend, not yet below 50, presently at 54.79, so still indicating there is some positive momentum there, but a slight concern that it's in this solid downtrend. Likewise on the MACD, they're in a downtrend but above zero, so indicating momentum is being lost, but it's not quite yet negative. On the 4 hour, now here we're up to the resistance of the 50 on this 4 hour. That has caused problems yesterday evening and this morning. We've pulled back from that level, so that's the dominant level on this chart. Below there, the 20 is going sideways. It would give support at 127.04, but let's wait and see if we get down to meet that. If we could get back above the 50, that would start to turn around, so be aware of that. And then the next resistance above there would be at the high of the 7th of November, which would be 128.18. Momentum has improved on the short term with the RSI back above 50, although again it has declined. It's presently at 51.68. MACD not quite above zero, and the short term is diverging towards the long term again, so that we need to get a perk up there for the momentum to show to go positive. Looking at the support and resistance levels, there's resistance from the high of 27th of October 129.17, and then from the downtrend in 200-day 129.90, with support, as I said in the video, on the 20 of the 4 hour 127.04, and then the low of the 10th of November 126.665. So that's been TA for traders, having a look at US dollar versus Canadian dollar. The conclusions from the video, well, we haven't quite discerned, is this another flag? Let's wait and see. The Fibonacci 50% level has created a barrier to dollar strength, hence the flag. We're presently finding support on the 20-day. That's probably the critical on the daily. Momentum turning negative on the daily and the 4 hour. And on that 4 hour, we're right up to the resistance of the 50 average. So keep your eye on that. So really 2 averages to keep an eye on. That's the 50 from the 4 hour and the 20-day. A divergence from either of those will determine the direction for the dollar in the short to medium term. Thanks for watching this video. Please remember, these videos are my opinion and they are not an investment recommendation.